Next up, I'd like to introduce Mahi Sall, the CEO and founder of FinXpair. He's going to be moderating a very interesting set of panelists on global perspectives on open banking, open finance from the bleeding edge. Over to you, Mahi.
All right, so thank you for joining us at the Fintech and Financing Conference by the National Crowdfunding and Fintech Association of Canada to discuss open banking, open finance. Our distinguished panelists are pioneers, early adopters, and thought leaders driving open banking, which arguably is one of the most profound tech and business model innovations of our time. My name is Mahi Sall, and I'll be guiding today's discussion. Our panelists are Karen Machado, responsible for the open banking business and regulatory agendas at Banco do Brasil. Karen is a recognized top female open finance professional and a member of the Brazilian Federation of Banks and Payments Association's Open Finance Executive Forums. Welcome, Karen. We've got Hugh Davies, co-founder and Chief Commercial Officer of Ozone API from the UK. He's held executive roles at HSBC, MasterCard, Barclays, and led the ecosystem growth at the open banking implementation entity in the UK. Welcome, Hugh.
Thanks, Mahi.
Last but not least, we've got Zennon Kapron, founder and director of Kapronasia Research and Consulting. Zennon is a recognized thought leader of fintech in Asia. He's testified in front of the US Congress on matters of China fintech. He previously held executive roles at Intel and Citi, to name a few. Zennon is Canadian. Today's conversation probably has a very special meaning for him. Welcome, Zennon.
Pleasure.
To kick things off, please give us a sense of what your companies do in relation to open banking and open finance. Perhaps, Hugh, you want to go first?
Yeah, sure. So first of all, thanks for the invite to be part of the conversation today. So yeah, Ozone API, I guess we've been involved in the design and delivery of open banking right from the very beginning. So myself and my fellow co-founders were helping to lead the design and delivery of the open banking approach in the UK, which has effectively served a blueprint for a number of other markets. So, and when we were doing that, and my co-founders are the guys that led the development of the open banking standards, we saw how challenging it was for banks and financial implementations to do this really well. To do it well often took huge teams, tens or hundreds of millions of dollars in budget. And it was a real challenge. So yeah, we actually started by building an official reference implementation to show how it should be built. And from there, we built a platform to help banks and financial institutions. And now we're working with banks and FIs around the world to help power their open banking APIs, whether that's to comply with regulation or to go beyond and deliver value-adding APIs. We also work with central banks and regulators in a number of parts of the world to help them, I guess, design and shape the open banking frameworks and put in place central technology infrastructure. So yeah, our sleeves are rolled up, helping in quite a few markets around the world at the moment.
Brilliant, brilliant. Who's next? Zennon, you perhaps?
Sure. I guess I'm off mute, so that makes it easier for me to jump in next. Thanks as well for the invite. My name is Zennon Kapron. My background is the financial industry from the beginning. So I was born in Canada, grew up in the States, studied computer science, and worked at Citi for a number of years on the technology side. So originally in the US and then in Europe. And when I left, I was the head of technology for Citigroup in Portugal. I came out to Asia in 2004. And so I've seen a lot of the development across the region, initially in China, where I was looking at the way that digital finance was changing the nature of retail and commercial banking in the country, and now based out of Singapore. And fundamentally, we work with clients to help them understand trends within the industry. And obviously, open finance an open banking has a particular strong meaning within the region. I think just in general, at a high level, when we look across the region, there's kind of two trends that we see. One is, regulator-driven open banking, and one is more around regulator-guided, but market-driven. And we'll get into that in more detail, I think, further on in the conversation. But we are seeing some use cases. I think, despite Asia being kind of moving ahead on certain things like around faster payments and innovation in the industry around crypto and blockchain and AI for that matter, it's been a little bit slow around open banking, and we can talk about some of the challenges later on around that. But fundamentally, we work with clients to help them understand what the business models could be and how to make open banking and open finance sustainable, whether it's in one of those regulator-driven or market-driven situations and contexts.
Right, brilliant. Karen?
Well, at first, I would like to thank you for the invitation. It's a pleasure to be here and share somewhat we've learned in the past 2 years implementing open finance in Brazil, and also to learn and imagine with you what's coming next. That being said, my name is Karen. I'm the head of open finance and banking as a service in Banco do Brasil. Banco do Brasil is one of the largest banks in Brazil with more than 70 million customers. And it's also the oldest one, working for 214 years. So you can imagine that to be relevant for 214 years, it had and has to innovate and reinvent itself every single day. Banco do Brasil has a very wide portfolio of banking solutions, which goes from current account, credit cards and loans to investment and insurance. So we also have a very complex portfolio, and it has also a very wide portfolio of clients too, from individuals to SMBs, wholesale companies, agribusiness, and private banking clients. Banco do Brasil has more than 4,000 branches all over Brazil, almost covering every Brazilian city. But it also has a very relevant digital presence with more than 27 million digital users. And as a large bank, BB is one of the mandatory participants in Brazilian open finance ecosystem. Briefly, as head of open finance, my job goes from discussing the patterns of open finance regulation with the regulator and other market participants and associations, and also guaranteeing that Banco do Brasil is compliant to the regulation. And mostly, what I think it's more challenging is to be ready to enjoy and create business opportunities and offer a better experience for our customers in open finance environment.
Brilliant, brilliant. So let's talk about the current status of open banking. Past weeks, you might know the UK celebrated the completion of the open banking roadmap with 7 million users, and the release of the report on the future development of open banking in the UK. Meanwhile, Brazil was celebrating 2 years of open finance, and in Singapore, 99% of respondents were researched by Finastra considered open banking as a must-have. What these milestones and facts mean to you?
Well, we've been working with open banking for 2 years now, and I think we didn't get to the end. We are trying to learn every single day, and we also have to show the population that it's somehow good to be part of the ecosystem. In Brazil, just large and medium banks are mandatory participants. Other institutions, for example, neobanks and fintechs, can join open banking, the phase that you can share data if they want. And we still have a few voluntary participants. So I think there's a great opportunity for another institutions. And we have to cover more financial institutions if we want open banking to be a trend in Brazil. But I think we built a lot here. When I see the numbers, for example, we have more than 20 million customers that already share their data with different institutions. And when you consider the numbers in the UK, it seems that we are in a very good path in Brazil. It seems that people are starting to discover that they can benefit from the open banking ecosystem. We have more than 40 million weekly calls calling for data from one institution to another. So we already have huge numbers, but we are just in the middle of the calendar. Nowadays, we implemented the open data phase. People can share data from account, credit card, and loans, for example, and also implemented the payment initiation service. But we still have to go to investment, insurance, exchange. So there's a lot to build.
Right. Hugh, what is your take on that? You're obviously from the UK, 7 million, again, users, all those milestones. What does that mean?
Yeah, thank you. It's a good question. So the first thing I'd say is, as we look around the world, I think each new market that's driving a framework, whether it's hard regulation or whether it's sort of regulatory guided, as Zennon was saying, I think each one is taking the opportunity to learn from and build on, some better than others, what previous markets did. So I think the UK did a really good job going first in terms of creating some good foundations that have been built on by the rest of the world. If I look around, I think there are pockets of best practice across a number of different markets. I mean, those numbers. So again, the UK is seeing sort of about 1 billion API calls a month at the moment. Those numbers are sound really big. If you actually look at it, I think what you see is there are certain use cases where it's now the de facto way of doing things, and it is embedded infrastructure that's powering the financial services ecosystem. So if I think, for example, about how a business connects their bank accounts to their cloud accounting platform or their invoicing platform, really the only game in town is using open banking APIs to do that. So it's secure and it's consent-based and it's standardized and it works. The journey for different use cases is at slightly different stages. So people are starting to use personal financial management and all of these tools. It's not right at the front of everybody's way of managing their finances at the moment, but there's been some great innovation. Another area where it's become real part of the fabric is making better credit decisions. So lenders using this access to make better affordability decisions, income verification, all of those sorts of things. Payments is the area where I think long-term it will be hugely transformational, but it takes a long time to build through that payments value chain. So UK, I would say, I mean, five years in, there's still some great numbers. It's still really early in the journey. This is putting in place foundational transformational infrastructure for the industry, a secure consent-based means of creating access between different organizations. That's massively transformational, but it's not overnight. But yeah, I think Brazil is, as Karen was just saying, has really kind of accelerated beyond the UK in a few areas. The scope of open finance is much broader. We're implementing open insurance for financial institutions right now. That's really exciting. If I look at markets like Saudi Arabia, who are going to be the next off the start line, again, I think there's a few things that are happening there that will set a new global benchmark. The way the framework's been designed is really innovative. There's some really interesting parts of the standards that are leapfrogging ahead of what currently exists, including the foundations for standards-based embedded finance, which is really exciting. So yeah, if I look around the world, I think there's some great things happening, but we're still quite at the early stages of this huge transformation.
Right. Zennon, what is happening in Southeast Asia at the moment? Can you perhaps give us a snapshot of the landscape over there?
Sure, yeah, and it's funny because I think back to, I joined Citibank in 1998 and they had a platform called My City, which was basically it was a screen scraping tool to bring together all of your accounts. And so I remember that was my first experience with the rudimentary basics of open banking and virtualization, which then became cloud. But it was really interesting around that time because I mean, for that, it was convenient, right? I mean, seeing everything on one screen. And now fast forward X number of years, and here in Singapore, they launched a similar platform called, I think it's Fintech, that they basically call it, that is account aggregation. And it's interesting to see how the government in a market-driven financial industry is trying to push this forward, because the kind of messaging around that was, this helps you get a better feel for your finances, so you can save better, you can have a better retirement, you can plan for emergencies, you know, all of the narrative that Singapore likes to include in these things. And really, you know, in developed markets like Singapore, the opportunity for open banking isn't as great as it is in some of the developing markets. You know, if we look at, we're doing some work in the Philippines now around open banking and open finance. And there, because of the lack of infrastructure, I mean, you look at a country like Philippines is about 50% banked. And that's like having access to a bank account. That's not even talking about, you know, being unbanked versus underbanked. You know, the percentage of underbanked people is much higher. And that's not a dissimilar situation in a place like Indonesia, Thailand, or other countries around Southeast Asia. And that's really where we see the big opportunity. It is like, as he was mentioning, I mean, it's very slow moving in these places, but at the same time, there are a lot of fintechs that are focused on disrupting the status quo. And when you have an environment where the financial infrastructure, I mean, you look at the Philippines, you look at Indonesia. Indonesia is effectively an archipelago of, you know, hundreds of islands. And those islands, you know, they don't have bank branches in many cases, but they do have a mobile signal. And, you know, as smartphone penetration increases, then all of a sudden, if you're a merchant or you're an individual, you can be online. And so we've seen success. Standard Chartered has set up their Nexus, which is their banking as a service offering, and have integrated with one of the e-commerce platforms in Indonesia. And so that allows all of that goodness of, you know, being able to lend to clients to set up white label bank accounts. And that's really effective in markets where it's underserved, because, you know, to a certain extent, the e-commerce player has thousands, if not millions, of merchants. The bank has the experience in doing the work and lending and setting up bank accounts. And so you're really marrying those two things, because, you know, Standard Chartered Bank, as an example, and they don't want to build out infrastructure in Indonesia, right? It's such a costly endeavor these days. So if they can already leverage what's there, you know, it's kind of virtual infrastructure because it's an e-commerce platform, but if they're able to leverage what's there, then they can bring their expertise in being a bank and, you know, providing those credit rating, the lending, and all the goodness there. And then the e-commerce platform can stick to what they're good at. So I think, you know, those kind of use cases are really interesting. Another one, and then I'll turn it back to you, Mike. But this one really blew my mind in Indonesia. There's a company that does kind of ERP software for gyms. So you think about like a Xero, but for gyms, and helping them. If you think about a gym, there's a lot of admin that's involved. There's memberships that you have to keep track of. There's staff schedules, class bookings, equipment, all of that goes into that. And so there's a company in Indonesia that was part of Mocha originally that provided this ERP software for SMEs, basically to run fitness centers. And then they started to realize, hey, wait, we can include payments in this. So all of a sudden, you know, the gym doesn't have to go to a separate payment provider. The payments are just embedded in the ERP platform. And they said, well, wait a second, we can provide lending. Because as is the same thing with Xero and all of these other platforms, you know, that gym platform has probably a better idea than anybody besides the owner of the financial state of that business. There's no way a bank would lend to, you know, a small gym. They're too risk adverse in most cases. But if all of a sudden you have view into that using APIs, using open banking, using embedded finance, then it becomes a much more interesting value proposition. So, you know, I think what's interesting happening in Hong Kong, Singapore, Australia, it is interesting, but really the opportunity in my mind is going beyond this account aggregation that we're seeing here in Singapore and moving into some of the hinterlands where the financial inclusion is much more of a challenge.
All right. Very interesting landscape indeed. And before we hit record, Karen was asking me about the status in Canada. So let's talk about that. In Canada, according to plans, open banking should go live later this year. A significant progress has been made around the system design, according to the Ministry of Finance. And right now, the focus is on governance. perhaps let's talk about some of the learnings that you have made or have heard about around governance. What are some of those learnings that you'd characterize as critical in ensuring a successful open banking implementation? Hugh, I think you are somewhat senior when it comes to implementation here. Talk about the governance piece.
Yeah, and I actually think to some extent the governance piece comes secondary. I think there are two things that really need to be thought about in the right way when it comes to delivering an open finance framework within a market. The first question is why, actually. So this is being done for a number of different reasons around the globe, where it is being driven by some sort of regulatory framework. And I mean, for example, in the UK and Europe, the why was actually about driving increased competition for the big banks and driving more innovation. The more innovation is a really laudable aim, but the initial focus almost created an embedded tension within the ecosystem. If this is being done almost as a punishment, it makes it really hard for the banks to really grab hold of and see the benefit of delivering great APIs that allow them to expose their products and services and payments and lending in new ways through kind of embedded experiences. And actually, I think it really acted as a bit of a handbrake on the development of the ecosystem. We're in a good place 5 years down the line, but I think the why wasn't broad enough. I mean, done well, open banking, open finance should be a transformational force for the financial services industry, but for society and economies in general. It drives inbound investment, it drives job creation, it creates innovation, it helps people get more out of their money, it brings people into the financial ecosystem that are currently excluded. So I think getting the why right up front is really important, and that leads to then kind of the right design principles in terms of the how. One of the things that's been really interesting seeing the approach in Saudi Arabia, actually, where there's been a so there's a clear why. This is part of a huge transformational vision for Saudi 2030. This is a pillar within kind of a societal and economic transformation. So it's got a big vision. And the start point then was, it wasn't governance and rules and legislation and frameworks. It was, what are the use cases and experiences that will really drive adoption and usage and set us on that path? And how do you make sure that there's a combination of use cases that deliver benefits for all participants? So the end users, the new third parties and fintechs that are coming into the market, but also the banks. So it's in their interest to do that really well. So the why is kind of a big impact. The how then, I think it has to be use case and user centric in what are the first things you want to get off the blocks. And then you need strong foundations. And again, this is more important than what's the governance committees. It will only succeed if it's based on strong standards that are implemented well with conformance and certification regimes. Brazil have done this exception. There's a common standard which all banks have to implement, and there's a conformance and certification regime. It hasn't always been smooth. There have been too many changes in the standards. But that foundation of strong standards and conformance and certification is allowing and will allow Brazil to race way ahead of Europe. So kind of the why then tends to shape the how, which is all about getting the foundations right and making it user and use case centric in the design. The governance piece, what are the committees and things like that? To be honest, it's important and you need the right people around the table. But if those first two things, the why and those common design principles aren't right, then you'll just have committees going round and round in circles. So I think they're the most fundamental bits for the industry in Canada to get right. And I know they're part of the conversation.
Right. Karen, talk to us about the governance, because you're coming from the banking industry and banks like, committees and everything around that.
Well, governance can be challenging. I don't know if there is a unique or a perfect approach, but let me tell you a little bit about how it works in Brazil. In general, it works like that. Our regulator sets general guidelines through regulation and the market, organize it in a group composed by representatives from several market associations, for example, large banks, fintechs, payment companies, and so on. They propose patterns and specifications. If in one hand, it's a very inclusive process because it guarantees that different perspectives are considered. On the other hand, it adds a lot of complexity and challenges in the decision-making process. So I don't know if there's a perfect approach for that, but governance can be really challenging. And going further, talking a little bit about the lessons we've learned, I think one of the most important is that integration can be a challenge. And that's why it's so important to have a unique specification and unique patterns to integrate all the companies. It's really necessary to test in advance, preferably multiple times. It's also important to have metrics to manage the ecosystem. They have to be considered from the beginning and they have to be consistent if you want to follow and manage how the ecosystem is evolving. And also education is very important to engage the population. And when I look at the internal environment, I mean, the challenges that a company can face, I think that even though open banking process is 100% digital, it's very important that the workforce is ready to help customers because there will be many doubts. People will ask your workforce about security, about benefits, and it's important that you are ready to help them. You also need to show that open finance data can enhance business and experience. And in my opinion, the best way to do this is to run some use case or MVPs and to learn really fast and to move really fast. And it's also very important that the board support this agenda because it will cost a relevant amount of money. It's expensive to implement open banking. And it will touch many different departments in the process if you want to get the most out of the open finance opportunities.
Right. Zennon, anything to add to that out of your research?
I think those are all really good points. I think the biggest thing for me is, I mean, we're seeing this there was just a trade finance company that shut down that was recently heavily funded and heavily touted over the past couple of years. I think we're kind of moving into this new environment where just talking about a good idea is not enough to be sustainable. You know, the valuations of these companies over the past couple of years. I did a panel at the Singapore Fintech Festival, and one of the best comments was from one of the panelists was, in a low interest rate environment, all manner of sins were committed. And that really points to the idea that, you know, the funding that went into some of these companies in the fintech space was completely out of line with their potential to impact the industry. And instead of looking at profitability, we're just looking at growth. And that reckoning we're seeing that in Asia now. So a good example is Volt Bank in Australia. And we interviewed the CEO of Volt last year, and we thought, wow, this company is doing really well. And all of a sudden they shut down. And a big part of their business was banking as a service that they were trying to offer. So I think much like Hugh and Karen have said, you know, validating and understanding where that demand is and catering to it is super critical, because especially in this environment now that interest rates are going up and you know, valuations are coming down, is that, you know, these organizations need to have a sustainable way to look at this. And account aggregation for the purposes of seeing all your accounts in one place. Sorry, I just keep on going back to that example because that seems like in my mind the least useful of all the open banking models. But you know, if that's the only thing that we're doing with it, then, you know, maybe we shouldn't be doing it. And those questions, I think over the past couple of years, it was very unpopular to ask those questions in particular environments around that. So I think in particular in terms of lessons learned is we lost sight of the basics and the fundamentals of business models in some of these cases. And it's not just open banking, but across the fintech space. And now I think a lot of that, we're seeing that come home to roost in the fact that these companies are shutting down because they're not sustainable businesses.
Right. Thanks for that, Zennon. Karen, you mentioned funding. Open banking is costly. Large banks in some countries, were asked to pay the open banking bill in addition to the cost of getting their own infrastructure up to speed. And most of these banks have not yet found the right path to monetizing open banking. Can you speak about your experience relating to that?
Already getting to a break even when you consider the cost of implementation and the new business that open finance can generate. But it's not easy to get to that point because it costs a lot to implement and to get to the point that the data is good enough to be used and to get to the point that you could transform your internal process in order to use that data, and also to convince customers to join the open finance ecosystem, because if they don't want to, you don't have data, and then you don't have any business opportunity. So in my opinion, it's costly, but it's worth. But you have to plan and you have to work a lot and in a very hard pace to get to the point.
Right. I recall an early, I recall an earlier conversation that you and I had, I think last year, and you mentioned that open banking is a huge opportunity for banks. Perhaps can you unpack that? What banks really get out of open banking?
For example, we can use information for credit decisions and to enhance the process and to make the process better. We can use open banking data to be more assertive when we offer solutions and service for people. Our conversion rates are highly when we use open finance data, for example. And I think there's still a very great path to payments that we are starting to learn and to explore when you look at payment initiation service, for example.
Right. You?
Yeah, I was just interested in the conversation there with Karen. I would perhaps start from a slightly different position, that I don't think open banking or open finance per se has to be expensive and a big infrastructure investment. I think the challenge for a lot of banks is, particularly large banks, is it's actually creating a digital layer that sits between the back end systems, the ledgers and the core banking platforms, and front end channels. And there's multiple channels. There's digital channels, there's web, there's telephony, APIs to partners and third parties. It is just one of many channels. So I don't disagree. There's a lot of complexity that banks have been wrestling with in terms of that digital transformation layer. Actually, I think the open banking piece doesn't need to be a huge complex investment. That's why we've built our business, to help take away all of that complexity. And we're working with banks to get this up and running and live quickly and at a very low cost. But the point around, what's the business model? That's the key one. That doesn't get discussed enough. So historically, banks have been vertical supply chains. They build the products and mostly sold through their branches or their channels. And this is, I think, the biggest business model opportunity. I've been in banking for 27 years. I've never seen a bigger business model transformation opportunity than this one. And if we look at other industries, Amazon now sell way more of other merchants' products than they do their own, because they have a place that everyone goes to. They don't want to deal with managing every product line. They've created this great marketplace. Banks have highly transactional and well-visited channels. if they can piece together everything their customer wants through connecting to other businesses and APIs, they can be much more central and much more primary in their customers' lives. That's on the how do you engage with the rest of the ecosystem. But similarly, banks have got strong balance sheets. They've got great products to lend, to manage payments, to onboard people, to assert people's identity on their behalf. So if they can deliver a great set of APIs, so they can be embedded in experiences and deliver products and payments and lending in the right place at the right time with the right context, because more and more experiences are embedded in a journey. It isn't about getting out of your house and going to the branch. It's completing it within whatever journey you're in. And delivering great APIs gives banks the potential to do that. That means getting to more customers than you could ever get through your own branch and your own brand, and delivering products in a much more efficient and effective way. I love the ERP example, actually, that context of understanding the gym sector better. If banks can be the balance sheet behind that, that can allow them to lend to businesses they could never normally get to. So on one hand, I don't think it needs to be as big an investment as some banks have made it. And I actually think the business model opportunity is way bigger than any of the banks are talking about at the moment. So I'm kind of really excited to see what comes next.
Interesting. Zennon, is the cost factor something that you hear a lot in the conversation that you're having around open banking in Asia?
Yeah, it's interesting the way that banks have done this. I mean, obviously Australia, it's mandated, right? So all of the banks are being drugged kicking and screaming into the CDR, customer data right, which is driving the adoption, or driving the adoption of open banking in Australia. So they don't really have a choice around that. And of course, I mean, banks will moan about any cost. I know that from working on the technology side. I was completely a cost when I was there. But I think just kind of tagging on to what Hugh was talking about, and we deal with a lot of banks here, and we just had a recent project with a large corporate bank, a very risk-averse corporate bank, and they said, what is our ability to do work in, like, say, the electric vehicle industry in India? You may not know about the electric vehicle industry in India, but instead of a 4-wheel electric vehicle industry, it's 3 and 2 wheels, because it's mainly scooters and kind of electric mopeds that are driving that. And there's really interesting business models there where they have charging point operators, or CPOs, that will allow you to charge, but they have this battery swapping as well. It's very popular there. So you would never think about swapping the battery in your Tesla, but you drive your scooter up to one of these shops, they take the battery out, they put a new battery in it, you drive off, right? You pay for the charge, but you don't have to sit there and wait for it. So you have all these really innovative business models. There's no way this corporate bank would engage with any of those players directly. They're just too risk adverse. They don't even want to deal with SMEs, like large SMEs. They want to deal with corporates, right? So how do you engage in that model? I mean, you have to engage through a platform or some kind of an intermediary that gives you access to that, but somewhat dilutes the risk of doing that. And so, like, going back to the gym example, you've got an ERP platform that really understands the consumers and the business, and then it makes it much easier for you to lend if you're very risk adverse in this particular case. So, I think when banks look at the cost, they look at, okay, we need to do this to implement, but I don't think they really understand the revenue opportunity that's there as well, because even 10 years from now, these banks would never engage with some of these companies, right? Like we have a traditional bank account here in Singapore with one of the big 3 banks, and we had some problems when we first set up the account in 2016. And I went to the bank and I called up their customer service line and I said, we're an SME with you guys. We're having this problem. They said, well, talk to your relationship manager. And so I said, okay, well, that's great. Could you tell me who my relationship manager is? And so the customer service representative taps away and comes back and says, you don't have one, right? And really that's the way it is, right? Because banks do not want to deal with SMEs in retail. Fundamentally, the margins are just not big enough to do that. So they deal with them at scale. And if the banks can't deal with the SMEs like properly at scale, then that's where we need to rely on third-party platforms, like the e-commerce platform or the gym platform or one of these other platforms to fill that gap. And so I think, when we talk about cost, certainly there's going to be cost in implementing this, but there's also going to be potential revenue there as well that offsets that. And I think too often those aren't matched up. We just look at, okay, it's going to cost us this much to implement the technology and be compliant with the CDR. But we don't look at, okay, what are the revenue opportunities that this could create if we think outside the box?
Right. Yeah, a very interesting conversation. Let's talk about adoption of open banking. Of course, it's early days, but 5 million connected accounts in Brazil in less than a year. I guess I'd like to understand what did Brazil do differently, Karen, in terms of adoption?
Are two main points. The first is our culture. I think Brazilian people is very keen to try innovation. So sharing data, it's not a very big issue in Brazil as it can be in other countries. For example, sometimes you go to the drugstore and they ask for your social security number in order to give you a discount, and you just give your number. You don't ask the drugstore if they are going to how are their process to how can I explain that in English? To keep your data safe, for example. You don't ask how you're going to erase your data if you want someday. You just give your social security number, and that's okay because you got a discount. So I think there's a culture aspect that also helps Brazil to have these huge numbers regarding adoption. The second point is that all large and medium banks were mandatory participants. So we covered, I would say, 80% of the banking population. So it's another way to make it very popular in Brazil. And if I can add a third point, discussing the infrastructure and have a pattern for everybody allowed the banks to integrate themselves and the process to work in a better way than in other geographies, for example.
Right. Thanks for that. Hugh, what is the situation in the UK? It seems like it takes longer. What impedes mainstream adoption in the UK?
Yeah, actually, before I come on to that, I guess one point building on what Karen just mentioned, I actually think still in Brazil, we've only barely scratched the surface. So as we move through the open finance phases, the number of account types and account providers involved will increase exponentially. But the other thing at the moment in Brazil, it's only the sort of authorized banks and payment institutions that can play in the ecosystem. So in the UK and Europe, one of the first things that happened was a regime to authorize new entrants to access these APIs as AISPs or PISPs, forgive the acronyms. That's still to happen in Brazil. So I think once that third party wave is unleashed, I think the pace of adoption and the pace of innovation will accelerate even further. So again, I think that will be really exciting. The UK, I think there are a couple of things that I actually think we're in a really good position, as I say, for things like integration of accounting platforms and bank accounts. It is the default way of doing things. Payments, it's starting to pick up, and there are certain use cases. For example, the UK Tax Authority has now taken over £10 billion of tax payments through open banking. That's a really powerful use case. And as I mentioned, it's being used significantly to help make better credit decisions by lenders. There are still a few things that need to be in place for it to really scale though. So the payments capability is a bit limited. The regulation only required the banks to implement single immediate payments. And then after that, variable recurring payments have become a possibility. But not all banks are supporting that yet because the mandated piece is very small. It's about sweeping between my accounts and my accounts. I think once a long-lived payment consent is available as a premium API at scale, I think we'll see a huge acceleration in payment adoption and a genuine transformation and a challenge to the dominance of card-based payments. So I think that will be the thing that really changes the landscape, as well as the banks starting to really embrace the opportunity of APIs to drive value. So things like, banks have invested a huge amount knowing the identity of customers. They can make it much easier for their customers to onboard to other experiences through things like asserting their identity or simple age verification. Some of the banks are starting to explore this now, like NatWest with their bank of APIs are doing some great things, but it's still really early days. So I think there's good adoption and it's building at a very, very solid pace, but there's a few infrastructural things that need to be in place, a lot of them driven by commercial drivers rather than regulation, that will really unlock the next phase.
Right. Zennon, anything to add to that?
I think the trends here in Asia are very similar to both what Karen and you talked about. Right.
Okay, let's talk about perhaps another concern, which is fraud. Fraud is part of financial services. It's always there. It's gonna always be there. I tend to say. Does open banking reduce or increase fraud? In other words, is there any strong evidence in either direction when it comes to that? Perhaps Karen? Have you found anything in that respect so far in Brazil?
The open banking infrastructure is very safe. As my colleague said before, we use a very high standards of security certifications. For example, in Banco do Brasil in 2 years, we didn't have any record of fraud in the open banking ecosystem. I think the real challenge is what we call social engineering. It's not the infrastructure itself, but it's the possibility that someone will pretend to be a bank and will get your data, pretending that it's in the open banking ecosystem. But the infrastructure itself, it's very safe. We didn't record any fraud incidents.
Yeah, I would agree with that. I think the fundamental foundations are designed to reduce fraud because the model is based upon establishing the parties involved in a transaction. So establishing trust, being certain it is an authorized third party, the bank, again, ensuring that it is the customer through strong customer authentication, and the customer then providing very explicit consent around what they're enabling. So the foundations are designed on strong security protocols to reduce the risk of fraud. I agree with what Karen was saying. I think the risks in the UK, for example, account-to-account payment fraud has rocketed over recent years, moving away from card fraud historically. And they're really simple social engineering, playing on people's fears around whether it's the cost of living now, or it was the pandemic, playing on people's fears, or playing on people's greed to defraud them out of money. Open banking should put some foundations in place that make that harder to do, but it doesn't get rid of that problem. I think where there is a danger sometimes is, so I think data minimization within the ecosystem will be important. So I think I read something yesterday, someone talking about companies with data gluttony, wanting to hold everything just for the sake of it. For example, to assert that someone is over 18, a third party doesn't necessarily need to capture and store their date of birth. So I think, again, open banking creates the foundations for an ecosystem where assertions can be made to allow a journey to continue without everyone needing to maintain and build more and more copies of the same data. If we ended up with lots of centralized honeypots of data, that could be concerning. But I think, again, creates the opportunity to avoid that if it's implemented really well.
Yeah. Absolutely. Let's go now and talk about the transition from open banking into open finance. That's like our last go around here. I'd like to ask Karen, what were some of the unanticipated challenges that you ran into as you went from open banking to open finance in Brazil?
Some complexity because we are talking to integrate banks and, for example, stock companies and other type of companies. So we have to discuss and build this infrastructure to connect everybody. And I think it adds complexity as well, because we need to teach the population, to tell the population about advantage, and also to come up and show some use cases, how they can benefit from this environment.
Right. Here, from a tech standpoint, okay, going from open banking again to the next level, what are some of the things that can be anticipated? I mean, the banking industry, generally speaking, is very strong in terms of regulation and all that. Think about Australia adding energy sector, for instance. What are some of the challenges around that?
Yeah, so actually, I think some of the bigger challenges are non-technical, but there are some technical challenges. But for example, open banking standards, a lot of it's about kind of establishing trust, ensuring consent. If you move from open banking to open insurance to open savings and investments, even to open energy, there's far more that is the same than is different. It's about putting in place that secure foundation to establish trust, capture consent. Okay, you might have some slightly different data objects in a current account versus a pension versus energy usage. But those fundamental foundations are the same. It's easy to extend the framework and the technical infrastructure. I think there's two challenges. So one is technical. Once you go outside of banks, many of the entities, so insurance providers, pension providers, they probably have not made the digital transformation investment that the banks have done, and they probably don't have really well-used transactional apps with strong customer authentication built in. So there'll be some challenges to kind of help make it easy for those players to adapt to this new world. That's one of the things we work on to help make it much easier for example, for an insurance or an investment provider to implement the technology. I think the biggest challenge, if I look at around the world, the move from open banking to open finance, or beyond that open data, it's usually because you then have a much larger number of regulators and entities that all need to agree on the approach. The UK right now, open banking, it's actually still complex from a regulatory perspective, but open finance now, there's a whole group of different regulators that all need to align and agree on the framework. They've created this, it sounds like a kind of a boy band or something, J-Rock, the Joint Regulatory Oversight Committee. But it's a committee of regulators to try and agree the approach. That fills me with dread, and I hope they get there. But I think it's the same in Brazil. We've got the Central Bank of Brazil, we've got SUSEP from the insurance perspective, and there'll be other regulators all need to kind of align around a common vision. So I think it's actually more the governance and the regulatory challenge rather than the technical challenge, albeit there are some.
Right. Zennon, any insights around that?
I think, when we move to open finance, that's where it gets interesting, right? When these functions become just embedded in everything else that's there, that's really when the consumer or the business that's using the service doesn't know that it's actually embedded is when we've been successful, right? It was when it's pretty much invisible. And Singapore, I relate this that one of the first times I came to Singapore, I've only kind of lost my wallet over the past decade in twice, and both in Singapore. And the reason I lost my wallet is because I was taking an Uber for kind of the first time, because they didn't have it in China at that point, but they had it here in Singapore. And I took out my wallet partway through the ride with the view that eventually I'm going to pay for this ride, right? And then I didn't have to pay for the ride. And so I forgot, that forcing factor of pulling my card out of my wallet wasn't there. And I left the wallet in the backseat of the taxi. Now, luckily, this being Singapore, the driver called me 10 minutes later, said, I have your wallet, and he wouldn't accept any money when he dropped it off to me. Whereas, Brazil, that may not be the same scenario. But I think once it gets to that point of being invisible, then that's really where we've hit the mark. And I think with all of these things, when we look at some of these e-commerce models where people are lending online, it just becomes embedded such that nobody knows it's there. And that for me is really success. And that's moving beyond just the account aggregation and payment initiation to some of the more complex business models that you can have around that.
Right. Okay, we are about to wrap this session up. And I'd like to ask you, looking at everything that is happening right now, 10 years down the road, what type of world do you see? Karen, in Brazil first and globally?
Well, in Brazil, we have to get to the end of the calendar, and I expect that in 10 years, we will be able to do that. Although we already have impressive numbers, in my opinion, there's a very long path to consider that open finance is highly adopted. For that to be true, for example, in my opinion, it's important that more institutions join the open finance ecosystem. For example, in the data sharing phase, besides the 12 mandatory participants, the large and medium banks, there's just 11 voluntary participants nowadays, and we have thousands of fintechs in Brazil. So I think we need to move to that, and in 10 years, I guess we will cover 90 or 100% of all fintechs. And thinking outside the box, I've already heard about a world open finance ecosystem, connecting financial institutions from different countries, for example, which, although might be very complex in terms of technology and regulation, I think it makes sense. Maybe in 10 years we can get to that, or we can get to the beginning of the discussion. And it's also possible to go beyond financial system, for example, with other open data initiatives, such as health or education, for example.
Right. Here on the same question.
So listen, I agree with a lot of the point Karen made there. I think this will be beyond the financial sector. We're only at the journey. So I think the beginning of the journey. So the best is yet to come here. Who knows what the use cases are in 10 years' time, but I think what we'll have is a much more digitally connected society where consent is actually something that's meaningful and manageable. Right now, everyone gives consent to their data and they have zero control over it. So this infrastructure actually will put much more control in the hands of the customer. But I think we'll have consent that's meaningful. I think we'll have far more embedded experiences. I don't think this will be the end of the big banks. I actually think this is a trigger for a transformation of the business model. And it's the big banks that they should really be able to take great advantage of this opportunity, as well as seeing innovation. And yeah, I don't know. I hope that it has had a very meaningful societal impact as well, in terms of laying the foundations for economic growth, tackling financial inclusion, and a more fair and equal society. I think ultimately that's the potential that this brings.
All right, Zennon, your view on that? My two colleagues have probably said it better than I have, but I think, again, this idea that this will just be the normal, of the business. We're already kind of seeing that now. And so moving beyond just some of these basic use cases to just have it being embedded in everything that we do. And I'm looking forward to seeing what the impact is going to be, especially in the emerging markets here. in Southeast Asia, because they're the ones that need this innovation more than anybody else.
Okay. Thanks. We leave it there for today. Thanks for coming on, sharing all these invaluable insights, and to everyone else, thanks for watching. This has been FinTech and Finance Conference 2023 by NCFA Canada. Goodbye for now.
Thank you.